There are several structures that traders do look out for to determine whether an uptrend has come to an end, of which one of them is the double top. Hello everyone, this is Paul from the Pen Academy, and in today's video, we're going to be speaking about the double top. And what are we going to be covering about in the double top video? We're going to be looking at what makes up this double top, how and when is it formed. Then also we are going to be talking about how can we trade it, what are the rules that we have to look out for in order to be able to trade the double top. You well know on our channel, we start with theory. We make you understand the topic in detail before we go into the chance to do it practically with you so that you do not get lost. So if it's your first time coming across our channel, make sure you click the subscribe button so that you do not miss out any content that we do release weekly. And also, if this is the topic that you've been looking out for, make sure you click the likes button so that also other people can come across it just like you have done. So without wasting time, let's start with what makes up the double top and how and when is it exactly created. So we have just mentioned that it's one of the structure that we traders look out for when we want to determine that an uptrend has come to an end, meaning that the first thing we're identifying here is that it is created at the end of an uptrend. Are we together? It is created at the end of an uptrend to make it a double top, right? Now, we're saying that how and when, we're answering now the when. When is it created? It's created at the end of an uptrend. That is one. Then two, how is it created? Let's look at how is it created. We have said that it's created at the end of an uptrend, yes. And we know that in an uptrend, we're making higher. We first make a high, we make a low, right? Then we make another high, which becomes a higher high. Why is it a higher high? Because it is higher than the previous high. Then in an uptrend, we are also creating higher highs and higher lows. Why? Because we are moving up, and when we're moving up, we're making higher highs and higher lows. So this one is called a higher low because it's higher than this previous low here. Are we together? So the market keeps on printing new highs because the new high that has been printed is higher than the previous high. Just like here, this is a new high that is higher than this previous one. So that's why we are saying in an uptrend, we're creating higher highs and higher lows. So when the market prints a new high here, this will become a higher high. Why is it a higher high? Because it is higher than this previous high here. Are we together? This is what makes up an uptrend. But remember, we just said that a double top is created at the end of an uptrend. Now, we have answered the when, right? At the end of an uptrend. What about the how? Now, when the market comes and retests this previous higher high to make a higher low, right? What do we expect the market to do? We do expect the market to give us a new higher high. Remember, we have said the market is creating higher highs in an uptrend. But the moment the market fails to give us that higher high and instead comes and is held at this current resistance, which is a higher high, because in an uptrend, we're creating new resistances, which later on are broken to become support. For example, if this market here, the price is here, and we have this high, this is a resistance. Now, when this high is broken to create a new high, this previous resistance becomes a support. Now, this is the new resistance that we have. This is a support, previous a resistance, right? So again, also if this new higher high is broken, it becomes support, making this new higher high a resistance, and this previous higher high, which was a resistance previously, becoming support. Now, if this price here, we have just said that we expect to create a new higher high. The moment it fails to create that new higher high that we expect like this, and price is held here at this high, this is the first symbol, or this is the first way how a double top starts to be created. But not yet, not very fast yet. There's a condition we have been mentioning in most of our videos. What condition is that? How does this price approach this top here? You can easily detect, or you can easily know. Do not predict the price, guys. Traders, we do not predict. We react to what the price is showing us. I do not like you guys to predict the price, right? So there's a behavior we've been mentioning a lot in almost all our videos. When the market is approaching this resistance, this high here that the market had created, observe the behavior with which it is approaching, right? Because most people tend to just assume or predict that this market has overgone up, so I expect it to reach and create a double top, and then we sell. Are we together? That is not the case. The market will continue going up, and then you keep losing your money. That's how most traders do lose their money. So when price approaches, watch how price approaches here. When price approaches here in a strong way, for example, if the sellers here were weak and the buyers take over and they start showing that they are strong. How do we know that they are strong? The size of the candles. We have spoken about shrinking candles or loss of momentum and gain of momentum in almost most of our videos. Just refer to our previous videos because our videos are connected, right? So the behavior here when we're approaching this resistance here is very, very key to us determining how a double top is created, right? So if the candles are very big while approaching this, there are higher chances that this market is going to break and create a new high and continue making higher highs, right? Now, how do we determine that it is going to fail to break here? If, let's say, there are 3 sellers here and then there are 5 candles in this distance. This shows that these 5 buyers have failed to take out the 2 sellers here. That shows that there's a loss of momentum in here. So there are higher chances that sellers, when they reach here, they're going to come back down and break this part. Now, I would like to introduce to a new term. This term here, once we break down this middle part here, it will become what we call a neckline. Are we together? It will become a neckline. So this is the first point of which you'll start knowing that a double top is being created is here. So this will become the first top, and then this one will become the second top. This is how a double top is created, right? We have answered the when. We have said it is created when an uptrend is coming to an end. Then the how, right? The how it's created when the momentum going up fails to take up the previous higher high or the previous resistance, so that the sellers overpower buyers and then they break below to create double tops. Now, someone is going to say that double tops look like an M. Yes, we have a video on M's, but a double top is simply in 2 ways, right? Remember, we said we have 3 types of M's. The first one is this one here, which we said is a double top. I remember mentioning it in that video. You can just refer to our video of M's and W's. Then the second type of M we spoke about was an M that makes a lower high. Now, this is not a double top. A double top is this one here. This is when the tops are almost at the same level. I'm going to explain to you why I'm using the word almost. This is not a double top. And also we spoke about the third type of M. This is not a double top. You can clearly see here the market is creating higher highs and breaks back below aggressively, breaking this point and breaking this point, right? So the one that we're interested in is this double top here, where the top is almost at the same point. Now, it's not going to be very, very perfect that these points are almost going to be at the same level. Sometimes the top can be just close to the other, just like this. You may see that there's a very small gap like this. Now, this is a double top. Sometimes even the market will touch this point and reject, and the candle starts from here, right? This is a double top. But once there's a significant distance like this very big distance, this is not a double top. This is just a type of M, right? Now, we have looked at when and how. Now, let's look at what makes up the double top. What makes up the double top is you will have a market in an uptrend. That's the first rule, right? The market creating this high, higher high. Then you will have a market having a higher low because we have high, low, higher high, right? Higher low. Then you will have a market having equal high here, making it the second top, right? Then this higher low, the first point is this one here, which is determined by this weak approach here. Remember, we have said the momentum with which the market approaches this higher high here, that it has created the resistance, is one of the factors you have to consider, the weak approach, right? Then another point that you have to consider is the aggression with which the sellers break this point, because we need this point to be broken, and we introduced this point to a new term, which is called the neckline. It becomes a neckline, right? So this is what makes up the double top. Then we also looked at how and when it is created. Are we together? Now, this takes us to the second aspect I wanted us to discuss about today. How do we trade the double top? Now, that, of course, how to trade is we're looking at entries and the rules, right? Now, we have said we have a market that is in an uptrend, right? We expect the market to continue making that. The moment the market comes down here and fails to take out this high here, it means that we start suspecting there's a possibility of a double top to be created. Now, if the approach here is very weak, right? This is the first point you have to look out for an entry. This will be your first point of entry. Now, this is those risk takers. What about those traders who are not risk takers? This is the first point, but the first point of entry is for risk takers. Then where's the second point that someone can determine or can look out for an entry is when we break out this neckline. Remember, we've mentioned that we need the neckline to be broken. But remember, guys, if you want to take an entry from here, observe the momentum, this momentum versus this momentum. This momentum should be stronger than this one. That's a communication that buyers no longer have energy to continue up. So that's when the risk takers can take a trade here. But of course, looking at candlestick patterns, break of a trend line, maybe at this mini trend line here. You can also look at break of the mini higher highs and higher lows that weak trend has created. Then also, now the second people who would like to take a trade on this movement here using this double top is after this first top has been created, the second top has been created, then we have broken the neckline. On the retest is when we take as our trade, the second entry, or those people who want to take a trade that is a bit safe, right? Of course, trading is about calculated risk, so we shouldn't use, okay, let me not use the word safe. So if you want to take your entry and your risk is not so high, this is when you should be taking, because we know that the market has already printed for us a double top. There's a loss of momentum, and then sellers have shown that they are very strong in the market. So there are higher chances that if we have our candlestick pattern forming here, we can easily take a sell, and there's higher chances that the trade will play out. So these are the two things that you have to consider if you want to trade a double top. I will repeat once more. A double top is one of the M's, but not all the M's are double tops. Put that into consideration. Secondly, it is created at the end of an uptrend. Thirdly, for you to take an entry at the second top, make sure you've observed the following: loss of momentum, right? The momentum with which we're coming to retest and make this higher low here should be stronger than this momentum going to touch the second high. And then also there should not be aggression here, and the candlestick pattern should be indicating to you that sellers have overpowered. That's when you can take a trade from here. Otherwise, if you want to take a safe entry, okay, let me avoid that word safe. If you want to take a better risk trade, you should wait for the market to break the neckline. This is the neckline here. This higher low here, once it is broken, it becomes a neckline, because we are creating now an M-like structure. This is a double top, right? We have said the double top is the first type of M we spoke about. We have a video on M's. Make sure you check it out. So these are the things you need to consider if you want to trade using the double top. I hope everything is clear. If I've been so fast, make sure you slow down the video, or if you have questions, make sure you just comment your question below. We usually look through the comments and we answer all your questions, right? Just put your queries in the comment section and we shall be able to answer you. So this is the theory part. I would like us to go to the chart and I show you exactly how these things come about so that you can make sense out of it, and then you go and back test. Okay, so I am on my laptop and I'm going to be using CAD CHF on TradingView. So let's try to look out for double tops, and then I'll show you exactly what an uptrend appears like. Please stick up to the end because I'm going to show you exactly what an uptrend means. Now, remember, in theory, when we are studying, we're just drawing things like this. We say this is an uptrend. It is easy when drawing an uptrend and a downtrend like this, but identifying it on the chart, it's very difficult. So just stick until the end, as I'm going to show you how you can actually identify when an uptrend is coming to an end or it's still continuing. This is a very, very important video. It's going to hit more than one bird with the same stone. So without wasting time, let's just try to identify where a double top happened, because this is something that already happened. So I'm just going to use an example, but we won't know. Let's just pick any area of that can be of use to us. For example, we have this double top, but this uptrend was so small. Let's not use that one. We have a double top here, but also the uptrend was so small. This one here, it's a double top, but the uptrend was so small. Now there's this big uptrend here. Okay, I think let's use this one. Let me just remove these things. So let's use this uptrend here that started here. We're going to look at everything that happened this side. We don't know what happened. Let's just try to look for what. For example, I can see there's an uptrend. There's a counter trend line here that we can use. So if the market breaks above this area here, we can expect the market to have started an uptrend, because right now we are consolidating. We do have a market that went up and then it's giving us no progression. Remember, we said momentum. Now, if you look at this momentum, all these candles still are not overpowering. 1, 2, 3, 4 buyers. So meaning the strength is still upwards. Remember, we said we need momentum when trading. You need to understand this term momentum. The moment you don't understand it, things are going to be very difficult. So now let's continue. Remember, we're going to bring in all the rules of the double top that we've spoken about in theory. Now let's see what an uptrend means, right? What an uptrend means, and then when we identify a double top, also we look at the rules that we have just mentioned. First, the two tops being created, and when the second top is going to be created, we need that loss of momentum, loss of power, that the shrinking candles becoming smaller, and then a break of neckline, then taking the entries. We're going to take the entries and we see exactly how you can utilize it on your side. Please, after this, back test it. You can do this on anything that you're trading, stocks, cryptos, Forex, anything that you want. Now, this is how we identify an uptrend, and we're going to do it with together. We don't know where it ended from. We don't know where the market broke from, but I'm going to show you the rules together, right? Let me just increase the size of the candles so that we can do it together. So let's go. Now, we have a market that has created this high here. If it is broken, we shall expect a retest, right? Remember, we said we are in an uptrend, we are making higher highs, higher lows. So when we break this point, we do expect the market to retest, unless if it's an impulsive move, so that the market comes and retraces to the fib levels. Are we together? So let's go. The market still has not broken. We are still inside. We want it to be broken. Now the market broke here. So we want it to come and retest it, which it did, and it came and retested. So it means that this is a new high. Are we together? In an up, remember, we're making higher highs and higher lows. So again, the market breaks above. What do we want? We want the market to come and retest, but instead give us an impulsive move. So let's see if the market will come back and retest. So meaning also this is a high. Are we together? Now, remember, we have untested level here. This is an impulsive move. So Fibonacci retracement rule applies. So the market continued, didn't break the fib level. If you're to bring your fib, those who are lost, we have a topic on Fibonacci. You can just go and watch it. You can clearly see these fib levels held it, right? So let's just remove the fib. So it means we're still in an uptrend. So the market will not be bearish unless we take out this area. We have marked this red area. As long as still above this red area, we're still bullish. So let's see if the market actually, so the market came back down, but still not taking out this area here, this red area that we talked about. So meaning we are still bullish. Now, in this case, the market also created another turning point here, right? We're still bullish, right? Let's continue. It did play around, right? It did play around, but still went up. Now we have even created a double bottom. Today we're not speaking about double bottom, we're speaking about double top. So again, we broke above. So when we break again a new high, what do we expect? We expect a retest, unless it's an impulsive move, right? So we came and retested this area. Now we have shifted. So we have created a sell area here, meaning that the market is not bearish until we break this area. We have printed this red dotted line, this one here. Before it was this one, but now it is this one here. I hope it makes sense, right? Let me just clear this. So let's continue. So here we have a new high that we have created. I think you can see that it's not as smooth as we look at it, or how it's drawn in books, right? This is how the actual uptrend is. We're making higher high, higher low, higher high, higher high, higher low, equal lows, yeah? Higher high, higher low, higher high, equal lows. We didn't take out the low, so meaning we are still in an uptrend. That's why I drew this red dotted line. Also here, we have a high, a low, higher high. This is a high, higher high. So we are making a higher low. As long as we don't take out this area. Why is the red dotted line here? Because we have a sell candle here, meaning we have built a line. So let's continue and see if we actually change trend. We did not change trend. You can clearly see, but this resistance is holding. So the resistance holding doesn't mean that the uptrend has come to an end. No, right? So we created a double. Most likely we're coming to retest this area here. You can clearly see, and then we continue up. So you can see the market broke up, came back, retested. You can see we're making higher highs, higher lows, higher highs. This is how it is on the real charts. So we also have a new high that has been created here, right? We have a new high that has been created. So we again break it. The same things. We expect a retest like that as we continue. We expect a retest. The market retested. Right now here, the market is not going to change trend until we take out this dotted line here. Are we together? If the market takes out this dotted line, remember we have been shifting it. Before it was this one, then it came to this one. Now it is this one because we have shifted. We have now created the higher high, higher low, higher high. So as long as the market didn't take out this slab area, we are still in an uptrend. But the moment the price takes it out, just like here it didn't take out, here it didn't take out. The moment it takes it out, we have shifted from uptrend to a downtrend. Are we together? So let's see. Now, this is the first time the market is taking out this area. Are we together? But still, we don't have a double top. If you want to trade a double top. Now, the market has an M, but not a double top. This is an M, this type of M. Remember, we have all the other types of M's. We have a video on M's. Go and watch it and make sure you understand all the aspects. But today's video, I'm focusing on double top. Now, this part I'm showing you what an uptrend is like on a real chart. Right? It's not as smooth as this higher high, higher low, higher high, higher low. Most people think this is how the chart moves. No, but I've been showing you how can you determine using these dotted lines. I'm showing you how can you determine that the market is shifting from an uptrend to a downtrend or it's still in an uptrend. Are we together? In case you're lost, ask your question in the comment section. I'll be able to help you. Now, this is for the uptrend, but now we can clearly see that we have shifted. Now we're no longer in an uptrend because the market has taken out our dotted line that we have created. Higher high, higher low, higher high. Now we have broken below. We have broken this turning point and also broken this turning point. So now what are we looking out for? Let me just clear this. Let me just clear all these drawings. So now I want us to come and look for our double top. Now, this is our highest point, right? Now, since the market has changed trend to a bearish movement, right? And we have taken out this point here. We said as long as the market doesn't take this point, we're still an uptrend. But now the market has closed below. So what do we want? We either want the market to come back here, because also this is an impulsive move. You know that after an impulsive move, we are using either upwards, we use fib, then we continue. Or if it's a downward impulsive move, impulsive down retracement, then we continue. So if it's an impulsive down, we shall expect a retracement, then we come down. But since it's a double top video, if the market will give us a double top, right, we shall continue. If it doesn't, then it means that this example is irrelevant. We shall look for another example. Are we together? So here you can use fib or you can use the double top because this is an impulse and also we have a top here. Are we together? I've given you two rules that you can use, or some of you call them strategies. This is an impulsive move, so you can use the Fibonacci retracement strategy, like you call it, or you can wait for the double top to be created, then you use it. But now, just a reminder, if the market is to go up, we need that we have three sellers, 1, 2, 3 sellers. We need as many candles as possible for us to reach here so that we can determine that the market is going to continue down to show that this momentum up was weak. We need more buyers, more buy candles here, failing to take out this, and we need the momentum of sellers here so that we can have our first entry here on the second top. This will be the second top. This will be the first top. Are we together? So let's now play and we see. Are we going to use the fib? No. So the market retested this area and pushed down. We're still not interested in this. At least we shall either use the fib, draw a fib from up here, from up to down here, so that we have the market coming to one of these fib levels, or at least coming back to the double top. Sorry. Let's now see what the market gives us. The market continued down. We're still not interested. Do not panic. That's why we say that trading is all about patience, right? So we're not yet interested in that. It has not met any of the rules, right? So here the market came and touched one of the fib levels and reacted. But still, no sellers come into the market. So we can't say that the double top has failed. Let's wait and see. You can see the momentum increased, touched the golden ratio, right? Still, momentum increased and went up. And we came and touched up here. So meaning we're not going to use the fib. If the fib level had held and the momentum stopped on the fib level, we would say that we're going to use the fib level, right? Then now, what do we want here? You can clearly see we said we wanted many buy candles compared to the sell candles. You can count them. I'm not going to count them, but you can pause your video and count and see if really what we are speaking makes sense or not, right? So what next do we want here? We would have the first top. For us to create the second top and to take our trade, we need a seller to come in with momentum, a very strong sell candle or the buy going up, faking people and rejecting back down here. That's what we are looking out for. So let's see if the market gives us that. It gave us a very long candle. Now here is the time you go to your entry time frame. So our first target is going to be just down here, right? Our first target is going to be down here, right? And it's where we're going to first, it's going to be our first target. So we go to our entry time frame, which is H1, right? We go to our entry time frame, which is H1. Now we do have a market that has clearly broken below this area here. And our entry is going to be when the market comes back here, right? So let's see if the market comes back inside there. Always be patient for the market to meet your rules. Do not take trades through panicking. If it doesn't come in, then we can look for a new trade below here. But let's first wait and see, right? So the market came here. Let me just draw this properly. The market came here, and this is when you can take your trade. So we're going to take our first entry here, and then we shall have a 1, 2. Shall have a 1, 2, 3 minimally. So our stop loss can just be above this area. Our stop loss can just be above this area here. Let me just reduce this. And then we increase this so that we don't have to suffer. This is just, we have a strong level here, but I'm just putting it up here. We want a 1, 2, 3. Just up here so that there, and then this is our target just down here, 3. So let's play and see how it goes. If it hits stop loss, it's okay. If it hits target, it's okay. So we want the market to come here, and then this is when the market hit our take profit, right? Now you can clearly see we followed all the rules that I gave you guys in the theory part, right? In case you noted the rules, right? So let's just see, go back to daily. And then we see how the structure is appearing right now, right? Let me just increase the sizes of the candle. Now, we say that this is what the target that we wanted, but of course, our rule to take trade is 1 to 3. So a swinger could take the trade up to down here, right? But I used H1 as an intraday entry. So our target would be this one here, but I used the 1 to 3. If you wanted to hold on for very long, this was the first target, right? Now, you can clearly see this is a double top, guys. You can clearly see the market didn't take out this area. So it's a double top. Now, again, this is just a bonus. Again, how would you benefit from this trade here? Because we know that the market has now changed trend. From an uptrend to a downtrend, we know that the market is going to continue down. Now you have this confirmation that the market has changed trend. It's no longer interested in going up. We said the double top happens at the end of an uptrend. So here we know that the uptrend has come to an end. But what next? We have now an impulse. We now want a retracement, and we can take our trade. So let me just, the video, the example would have ended here, or the video purpose would have ended here, but I just want to give you a bonus on this, a practical example, because trading is about doing more exercises, and I want you guys to practice more. So let's play and we see if a buyer comes into the market. If a buyer comes into the market, then we draw a fib. So the buyer came there. Now we are going to draw a fib from up here, up to down here. Now what do we want? We want the market to come to this fib level, and then let's also mark the golden ratio. Let's also mark the 50. Let's also mark the 61, right? Just here. So we remove our fib level. Now let's play, and when the market reaches end of the fib levels and shows loss of momentum or rejection, and then we look for our trade. Now you can clearly see we have loss of momentum. Now let me just explain once more the loss of momentum I mean. Look at how the candle was: big candle, smaller candle, then small candle, then a seller came into the market. Do you guys see this? Now when a seller comes to the market, what do? You shift to your entry time frame, right? You shift to your entry time frame and start looking for an entry. Are we together? So where is our entry going to be? Our entry is going to be when the market goes below this area, and then our stop loss will be above the next fib level. So let's wait for the market to break below. Not yet. Not yet. This is when the market broke below and then retested here, right? So this is when our entry is going to this is where our entry is, just here, right? And then we want a 1 to 3. But also alternatively, remember we set targets considering bigger time frame. So alternatively, you can set your target up to down here as a swinger, but we're just going to follow the rules of setting our take profit, which is 1 to 3, right? I just wanted to show you that your target as a swinger could be down that side. Now, our stop loss has to be above this above the next fib level. So we want a 1 to 3, right? Want a 1 to 3. Let me just, I will just reduce this to 1 to 3. Just there. Extend this so that we don't have to suffer a lot. So let's autoplay and we see if we hit stop loss, it's okay, but the rules have been met. Impulse, retracement, then this, right? Those who are in the Telegram channel whereby we share analysis, we did take this trade. I remember it very well. Hope you guys also remember it. So let's try to play and then we see. So the trade almost hit our stop loss. Let me just pause there a bit and then we see. This was, of course, manipulation. Oh, this was, of course, manipulation. I think it was news, right? This was news, I think, but it didn't take us out, right? That's why we said that we put our stop loss just above the next Fibonacci retracement level. So it didn't take us out. Let's see if it will come back for us, because in most cases when such news events come like this, normally it comes back to do what we call stop hands. So let's see if it will take us out. Let's see if it will take us out or we shall hit our target, right? So we are back into the drawdown. Then we come into profit. News, you can clearly see it is doing what we call stop hands. But this trade will definitely, even if it takes us out, we shall look for another entry. It seems it's going our way. Even if it takes us out, we shall look for another entry, right? But the rules have been met. Impulse, retracement, impulse. We expect the market to go down, right? So let's see how it plays out. See how it plays out. Okay. It required a bit of patience, this one here. So we did hit our target just here, right? So just let me emphasize on this. If you're using Fibonacci retracement level, your stop loss will always be above the next fib level. And in this case, we're using, our trade gave us an indication at 38. So our stop loss had to be above the 50% retracement level. So that is it for this video. I hope you guys backtest whatever we have spoken here. Go and try it out. TradingView has a backtest, one of the best backtesting tools available. You can use it. Go to TradingView and use it. Backtest these things. Whether you're trading stocks or you're trading indices or you're trading synthetic indices, backtest, and then you'll be able to see they happen or they work all the time. Right? Of course, sometimes you're going to hit stop loss here and there. You won't be 100%, but make sure you're winning more, right? Your entry should be better. We're going to be posting videos about entry. So if you've not subscribed, make sure you subscribe and you turn on the notification bell so that you not miss out the upcoming videos. They will improve your trading so that you can become a consistent and profitable trader. So if this video made sense to you and you got value out of it, make sure you click the likes button so that also other people come across it. Have a great day.